Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates. The vacation period is over, so cure your party hangovers, your sleep deprivation, because markets are back and it's 2024. Last year ended with a bout of dollar weakness and conversations of rate cuts. Well, today is the first trading day for the Western markets, and I'm sure you're curious, just like me, to find out the themes that may rule in 2024. Good morning, JK. A very happy new year to you. Take our listeners through the themes you think will rule 2024.
Thank you, Swaraj, and happy and successful year for all our clientele. Yes, the vacation period is over, but I hope the rupee market does not allow us to, continue in a sleep mode, because that stood out last year as a least volatile currency, whereas we had big volatility, whether you take developed market or the EM markets, but rupee was very, very steady. I mean, not to forget that actually we had a lot of flows into Indian market, and the heavy hand of RBI was very evident in reading in the rupee volatility. And it really is a very unique year where we had only around 2%, high and low, if we include, and then on a year-on-year basis, just a 0.5% move in the rupee, hoping for better volatility this year, and more importantly, to a more market-determined exchange rate. That's the hope. Now, trading for the year 2023 closed with some sell-off in the treasuries on the last day. So there was a disappointment that Spanish inflation was not falling further, and it was somewhat higher. And there is expectation, or rather, there is speculation whether the Eurozone inflation has seen its bottom. We will have evidence of it this week when it is declared on Thursday. So, and the market has been very heavily positioned long in the long end treasuries, and there was no surprise that we saw some profit taking ahead of the start of the new year. Of course, we also had some underwhelming news once again from China, and that is not a surprise, of course, because the PMI manufacturing from China disappointed, coming at 49 versus 49.5, and the data continues to show that the Chinese economy is still to recover, although we did have some green shoots last year, but more consistency is what the market is looking for. And of course, the Chinese market look extremely undervalued. But for the investors to take interest in staking their money, I think Chinese economy has to show better performance. And we also did not have such a very good news on. Rather, we had a very depressing news when powerful earthquake hit the Japanese. Japan, and there were some casualties, and more tremors have been heard in the last 24 hours. Really, we are waiting to watch the market impact as participation increases. Yes, we also have the week in which we are straight away jumping into a lot of data. We have the PMI numbers from various economies today, Europe, UK, and US. Then we have the various indicators on employment situation in the US, starting with JOLTS data, and also the ADP numbers, Challenger layoffs. And Friday, we have the monthly non-farm payroll, where expectation is for a rise of 150,000, less than last month's number, of course, and the unemployment rate also expected to inch up to 3.8%. But a weak number is something that market is already discounting. So there is some scope for disappointment if the number comes higher, and then there is a possibility of bounce in the dollar as well as in the yields if the number does come higher. We also have the FOMC minutes this week. So the data slate is quite full. Eurozone inflation, of course, is also something that we'll be watching out for. So a lot to expect in terms of what can drive the markets in the first month of the year, because the Eurozone, interest rates have been projected to continue at higher for longer. That's what the ECB members have been saying, quite contrary to what Fed has been, projecting as a possible 0.75% rate cut, although the market is discounting a lot more. So whether the central banks align with the markets as far as Europe is concerned, or whether the market aligns with the Fed's projection in the coming days, these are interesting things that we need to watch out for. We also had the trouble in Red Sea continuing, as Iran itself has sent, is reported to have sent a warship after one of the US ships attacked the Houthis. So we are starting with a lot of news, because markets have not yet reacted much, because the participation is still much lower. Therefore, we should expect quiet day perhaps in the initial part. Then I think as Europe steps in and the US joins in, activity level must be much better. But the full level of activity should only start by next Monday, by when we will also have the various indicators on the US economy, including the latest jobs report. So that is it. And for rupee, of course, flows will again be the starting point to focus on. And if we do continue to get flows, and there's no reason why we should not expect the flows, because we are in anticipation of large flows for the bond market. Stock market, of course, there are some valuation concerns whether the investors will take profit ahead of the key general election in March, April. So there are more questions for which we should try to find answers in the coming days, and also update you on the same. For now, of course, we wait for some clues from the market, initial clues from the market for our activities. Thank you.
Thank you, Jack. And this week we of course have a lot of data. As you mentioned, Eurozone inflation data, which is on Thursday. We have got PMI numbers from UK, Europe, and US, and a lot of US job market data as well, including the unemployment rate that will be out this week, and the FOMC minutes. So a lot of things to chew on. Of course, as you mentioned, a weak labor market has already been discounted by the markets. Now, on the geopolitical front, Red Sea troubles continue. Iran has now sent a naval ship to the Red Sea, getting possibly directly involved. Data out of China, manufacturing PMI disappointed, coming in at 49, which was below expectations. So a lot of things to track on the geopolitical front and even on the markets front. So do tune in regularly to get the latest updates on the financial markets. That's it from us today. Thanks for listening.